Money Monday, presented by Oklahoma Central Credit Union.
We are continuing to follow the stock market after Reddit users from the page Wall Street Bets drove up GameStop's stock price last week, causing hedge fund investors to lose hundreds of thousands of dollars. Now, online brokerage Robinhood is only allowing users to buy one share of GameStop's stock. If a customer already owns one or more shares of GameStop, they will not be able to buy any more. Robinhood is facing several class action lawsuits for restricting trading last week. Our financial expert, Paul Hood from Hood CPAs, joins us now to help us understand what in the world is happening. Confusing for most of us, Paul, and we need your help. For people who are confused by all of this, how were the Reddit users able to get as much money as they did from the GameStop stocks?
Well, stuff like this happens throughout, the life we live in right now. For instance, let's say, somebody who is a football prospect and they're a 3A, and all of a sudden Alabama looks at them and they go to a 5A prospect. Or Warren Buffett goes to and buys a stock and people find out about it. It's other people run to it. So it's an artificial inflation of a price. But what happened is this was very, very intentional, that this group of people got together and they didn't like what hedge fund managers do. And without going into a big discussion on what selling short is, it's basically borrowing a share from a bank or whatever, paying a little bit of interest, selling it, expecting it to go down, that you don't own it. So then when it goes down, you buy it back and give at a lower price and give the stock back, pay your interest. So it's an inverse of what you normally do on selling things, to create a gain. So what happens is these people got together on Reddit and said, well, we're going to punish these guys and we're going to make sure this doesn't happen. And so they drove the price of the stock up by just artificially buying it. The problem Reddit has, or Robinhood has, is that they stopped trading on one side on the retail level and not on the big institutional fund, on the big institutional side. So this was just an artificial driving up of stock. People need to be real careful, because what goes up has to come down. And I was sitting at a restaurant yesterday, actually, and behind me was a family, and there was a young man there that probably just learned how to shave, but he was explaining to his family how to invest in the stock market. And the reality is this is all speculative. It has no intrinsic value. There is no reason why GameStop should be this high. And really, it's a dangerous game, because it's kind of like a pyramid scheme, that eventually that stock is going to come back to its actual value. So it's an artificial inflation of the price. And a lot of people made a lot of money. But the institutional investors, these partnerships that hedge funds are really paying a price, because somebody came in and changed the game on them. So it's the
big question here now, Paul, is it legal or illegal? As I mentioned before, Robinhood now facing, as you know, legal action for restricting the trading. Do any of these lawsuits have a valid claim? Did the online brokerage really restrict trading?
They absolutely have a challenge, or they are at risk, and they did not do what was right, because who's to stop? I mean, it's kind of like the run on toilet paper, Brian, that I don't know what COVID had to do with toilet paper, but the run on toilet paper. And imagine if the price of toilet paper was actually tied to demand. And so as demand went up, the stores could drive that price way up. Well, that's the way stocks are. And the demand, supply and demand, our system dictated that price would go way up. So when Robinhood came in and artificially restricted that trading, I think they stepped across a line that they're going to pay a price on it, because they didn't just stop trading altogether. They stopped trading on one stock, and they stopped trading for just one selected group of people. They knew it was artificial, but it was legal, and there was really no basis, I don't believe, that they should do that. I just want to make sure people are cautious that this is not, we live in an immediate society, microwave, text message, get mad when it doesn't go through immediately. And this is not a good plan for prudent financial planning. But it's kind of like gambling. When it goes up, it's going to come back down, and there's going to be a lot of people get hurt.
All right, Paul, thank you so much for breaking this down for us because we've been getting a lot of questions about it here over the past several days. We'll get to viewer questions coming up next Monday. So if you're watching right now and you have a financial question you'd like for us to chat about next week, please send in your question right now to moneymonday@griffin.news.